Okay, I know people are still logging on, but in the interest of time, we'll get this webinar started. Aloha and welcome to the Chamber of Commerce of Hawaii's Maui Employment Law presentation in partnership with the Maui Chamber and Torkildson Katz Law Firm. I'm Sherry Minor-McNamara, President and CEO of the Chamber of Commerce Hawaii. And again, thank you for joining us for this very important presentation on navigating employment law and supporting employees in the aftermath of the wildfire disaster. Employers and employees throughout the state are facing uncertainty. This webinar will aim to provide valuable insights and guidance about relevant employment laws, including wage payments, volunteer activities, the Dislocated Works Act, vacation and sick leave payout, as well as unemployment benefits and more. Together, we can learn how to support employees affected by the Maui fire during this really challenging times and be prepared for future crises. So we are so thankful to have our featured guest speakers with us this morning, John Knorek and Joseph Ernst, directors at the Torkildson Katz Law Firm. They will share their expertise and knowledge of regulations and laws that apply to employers affected by the disaster. But before we begin, and I announce the housekeeping rules, it is my pleasure to introduce Pam Toompa, President of the Maui Chamber of Commerce, to say a few words. Pam?
Thank you so much, Sherry. We'll welcome everyone to this special session. As you know, we've seen great devastation on Maui. Approximately 800 businesses were directly impacted by the wildfires. We've lost 2,200 housing units. We've lost boats in the harbor, about 50 boats. So many businesses have been devastated. We're now, housing those people in primarily hotels, those who are displaced. But we're still working on a transitional housing plan. Unemployment is soaring. Drinking water is still not available in some areas, so some businesses that could return to operation are not able to return. And we're just seeing employee needs and business needs growing at a time when we're working on solutions and trying to rapidly deploy efforts to help. And in that vein, I really want to thank Torkildson and Katz for creating this special session for all of us today. They too are rapidly deploying solutions, recognizing what's happening in our community and what it means to employees and employers in these very difficult times when we're seeing things across the board. And housing solutions are going to take a long time, which means that there are going to be continued struggles over the next couple of years as we just work to provide basic services. So this is a great time for all of us to work together. And we really appreciate this special session and thank Torkildson and Katz for doing that. We also appreciate our great partnership with the Chamber of Commerce of Hawaii, who's been willing to serve since day one and jumped in to also help raise funds for Maui efforts. And, it takes a village, and this is going to be a long-term recovery for us. The next several years are really going to be critical. We are a very resilient community. We will rebuild. If you think about Lahaina town and the businesses who were there, it was a very expensive place to operate a business, let me tell you. So we had really amazing entrepreneurs and businesses. Surviving COVID alone shows you the strength of those businesses to operate from that location and to have a very difficult time being the most reliant island in Hawaii on the visitor industry. But we shall overcome this too, and we appreciate the outpouring of support and help. If you want to adopt a business or contribute to efforts that are going directly to that relief, you can visit us at mauichamber.com. We so appreciate all of the dollars being contributed to directly help businesses. Others are focused on social service, and a lot of money's coming in for that, but we're focused on directly helping those businesses survive so they can keep their employees employed. And we're going to need to see that recovery soon. So we just want to thank you for all of your efforts. And we hope you, and no, we don't hope, we know you're going to get a lot out of this session today that will help you move forward, and that they'll be answering many questions. So we're excited to participate. And again, want to thank Torkildson Katz and the Chamber of Commerce of Hawaii for all of their efforts, and to all of you for wanting to do the best for your business and your employees and being here today. Aloha.
Thank you so much, Pam, and thank you so much for all that you're doing as well, and really being the boots on the ground and supporting the businesses there during this trying times. Okay, before I turn the discussion over to John and Joe, of course, I wanted to go over a few housekeeping items. The webinar is being recorded, and a copy of the playback video link and slideshow will be shared with all registered attendees later next week. Regarding the Q&A, please submit your questions during the presentation by clicking on the Q&A button on the bottom of your toolbar. And for those joining by phone, you can email your questions to Trisha Fetui at tfetui, that's TFETUI, at cochawaii.org. All submitted questions will be reviewed at the end of the presentation. Okay, now let's get started with the program. We're so thankful again to have John and Joe with us this morning to provide more information about the impact of the Maui wildfires on employee support. And at this time, I am passing the virtual mic over to John. John?
Thank you, Sherry, and thanks, Pam. We are honored at Torkildson Katz to be able to provide some resources to the business community on Maui and across the state dealing with the fallout from the wildfires. And in order to help support business and employees in this terrible time, we thought it'd be a good idea to just give a quick update on how the laws apply in this kind of unusual situation and answer any questions. So I'm really encouraging everybody that's signed in to use the chat box or email and send in questions, because that's why we're doing this. Joe and I talked about becoming a resource and approach the chambers, and we were lucky enough to have that cooperation so we can provide this service to everyone attending and beyond. So with that said, we can begin, I guess. Our hearts are with everybody on Maui and across the state that are experiencing problems with the devastation of the wildfires. So we're going to talk about a number of different categories of employment laws. And unfortunately, employment laws are not suspended during a natural disaster. All the laws apply just as they did before the fires. So some of the things we're going to just briefly talk about are unemployment benefits and how they apply in the situation that we're in, what obligations there are for prepaid healthcare benefits, how vacation and sick leave might apply during this period of time. I'll cover those areas. And then Joe's going to pick up and talk about volunteer activity and the laws that apply or may apply to employees in that situation. And then finally, the Dislocated Works Act and how it might impact businesses. Next, Joe. Okay, so one of the things to keep in mind is the state does provide an unemployment trust fund. Employers pay into it out of their payroll. And whether or not an employee is separated from employment, if they are not offered work or only a reduced work opportunity due to the disaster, they may apply and be eligible for unemployment benefits. So full-time employees who have reduced work or go to part-time or don't have any work as a result of the wildfires may apply and are probably eligible for unemployment benefits. Next. Now, if they're still employed and offered work that they can perform, they may be denied unemployment benefits. I know many people are just devastated and are trying to figure out what to do, but there are some exceptions to be turning down work opportunity, and that's the next. For example, if you're medically disabled due to some mental condition like PTSD or physically disabled for some reason, you may be covered by workers' comp or TDI. If you receive workers' comp benefits or TDI, you're not eligible for unemployment benefits. It's one or the other, because to collect unemployment benefits, you have to be able and available for work generally. Next.
This
Okay, so if an employee voluntarily quits, for example, to care for an ill or injured family member or spouse, or accepts employment requiring relocation a distance away from where they previously worked that would be impractical to commute from, then the employee is entitled to unemployment benefits. And these would not be chargeable to the employer's account, which is important because the usage on your unemployment account could affect your contribution rate. Now, if a full-time employee loses employment and then subsequently picks up work that's less than 20 hours a week, they may be able to quit that part-time work and still collect benefits. And the unemployment regulations provide that a former full-time employee who is now working part-time, which is 20 hours or less, can quit that and still collect unemployment benefits if it's economically unfeasible for them to continue the part-time employment. Next. If the part-time employment was outside the individual's customary occupation and would not have been considered suitable work at the time the individual accepted the part-time employment, and there's a bunch of factors there that you can take a look at to review. Next. Another reason that the employer failed to provide sufficient advance notice of work schedule changes is an excuse to quit. There was a work schedule conflict with other concurrent part-time or full-time employment, or any real, substantial, or compelling reason, or a reason that would cause a reasonable, prudent employee, genuinely and sincerely desirous of maintaining employment, to take similar action and to try reasonable alternatives before terminating that part-time employment, or a change in working conditions, or a change that's prejudicial or detrimental to their health or safety, or a change in the terms and conditions of employment, including rate of pay, promotion, duties, or work hours. So employees can continue to collect if for all those various reasons, if they just cannot continue the part-time employment that might be available. Now, here's one for owners. An owner employee of a corporation who brings about the owner employee's unemployment by either divesting or selling their business, leasing the business, or terminating the business, or by other similar actions where the owner employee is the party initiating termination of employment, they have voluntarily left employment, would not be eligible for unemployment benefits. This, I have not seen a case testing this in a situation where the business was lost due to a disaster. I imagine there may be mitigating circumstances here for owners who apply. And I've been asked this question by several owners whose business lost businesses on Maui as a result of the wildfires. And I haven't heard what the result was. So I'm hoping that the state will consider that an exception to this provision. Next. Now, here's one, and remember, unemployment benefits are not eligible. Unemployment benefits are not available for aliens who are not authorized to work in the United States. So there are obviously a lot of employees on Maui and elsewhere throughout the state that hold citizenship outside the United States and have green cards to work. But the reality is there may be some who are not here legally. They would not be eligible for unemployment benefits. Next. Okay, and these are some of the reasons for unemployment benefits not being charged against the account of an individual's employer. That is, if they left work voluntarily without good cause, or were discharged for misconduct connected with work, left work voluntarily for good cause not attributable to the employer. So those are reasons to that employee might be denied benefits or would not, the employer would not be charged for their unemployment benefits. Next. Okay, that's unemployment benefits. I think that cover a wide variety of situations that we're facing right now. Prepaid healthcare is another issue. It's a costly benefit that employers provide to their employees. The way the Prepaid Healthcare Act works is we are prepaying for the next month. So employees who work 20 or more hours a week for 4 consecutive weeks are entitled to prepaid coverage. If the employee is separated from employment, that is the last month they're entitled to coverage. However, an employer can deduct up to half of the premium for the last month an employee is working for a company without regard to any limitations. Now, if an employee became disabled while still employed with the employer, the law requires you to continue coverage for that employee for the balance of the month in which they become disabled and unable to work, and for 3 months thereafter. If you, as an employer, have 20 or more employees, you're subject to COBRA, the Consolidated Omnibus Budget and Reconciliation Act, that provides for continuation healthcare coverage at the employee's own expense. So the employee would receive notice from you or your carrier if you've contracted to do so. Now, smaller businesses that are impacted by the cost of healthcare premiums can apply to the state for a premium supplementation fund and get assistance in making those premium payments if you have 8 or less than 8 employees. That does allow employers to continue healthcare coverage for employees that would not otherwise be eligible. However, you have to check with your health insurer and their plan they'll allow you to do that. So some businesses that, out of consideration for employees, are willing to continue to pay for healthcare coverage may face their insurer's limitation that says if they are not eligible under the statute, they would not be covered under the group plan that you purchased. So just because you want to continue healthcare coverage for somebody who may not be working due to the disaster, you may not be able to do so under the terms of your healthcare plan. So that's something you need to check if you want to be generous in that regard with your healthcare provider to make sure you can continue that coverage. Likewise, if you have a collective bargaining agreement with any of your employees that are unionized, your collective bargaining agreements sometimes provide that employees who are either disabled or unable to work get continued coverage for some length of time. Sometimes that's tied in directly with the seniority language provisions of your collective bargaining agreement. Next. All right. Now, let's talk about generally sick leave and vacation. Sick leave and vacation are not regulated by state laws. The only thing the state law says is you have to post your policy and make it known to the employees, and you have to follow whatever you tell them you're going to do. So whether you provide PTO, sick leave, or vacation, your obligation is to provide that benefit. Next. Oh, back up one more. Sorry, Joe. I'm going to talk a little bit more about this. Okay, so one thing that has come up, and I thank Patty C. over at Territorial for reminding me of this, and that is some businesses want to create sick leave, vacation, or PTO banks for their affected employees. And employees in those situations, employees would contribute their vacation or sick leave into a bank, and then the employer could allow employees in need of that accrued paid leave to tap into that. Now, the IRS has issued guidance on this, and and they say that, yes, an employer can do that with no tax consequences to either the employee receiving the benefit or the employee donating the benefit. So there's no tax deduction allowed for making a gift of PTO. And however, when the employee who receives the PTO or vacation or sick leave from the bank uses it, it's taxable income to that employee, just as if it were their vacation or sick leave. And this is IRS Notice 2006-59. IRS Notice 2006-59. And there are 8 factors that control whether that sick leave bank applies. And you can check that out. And if anybody has interested in that, we can provide that guidance to you. The last thing I wanted to say, and this is the hardest thing to face in our situation, and that is employers that have a no solicitation policy, meaning they have policies that say employees are not allowed to solicit one another during their working time or the working time of the other employee. Have to keep in mind that the National Labor Relations Board and Act limit the enforceability of those policies to to strict rules that limit the number of charities that are allowed to be solicited by employees. So there's an exception to the no solicitation rule that allows employers to allow employees to solicit one another for 2 or at most 3 charities a year. There is no exception for natural disasters. And every time there is a major national disaster and there was guidance issued after 9/11, that's the rule. You get 2 or 3 charities a year. And you want to be careful that not to exceed that if you want to maintain the enforceability of your no solicitation policy. That's what I had today. Joe, it's all yours now.
All right. So I did just kind of want to mention that we set up this presentation with the idea that we wanted to give a lot of time for people to ask questions and sort of for us to field stuff as we go along. So, don't be afraid to type something in the box for us to answer. And I think that we'll probably have a fair amount of time at the end. So hopefully, we can address those questions as they come. But all right, so let's turn to something that is likely coming up quite a bit. And, this is also a question that I think John and I do see from time to time anyway, particularly with our nonprofit clients. But, what do we do with people that want to volunteer their time to help, right? And particularly in a time of a natural disaster, you have a lot of employees or people that are outside of that want to, help out with the disaster. So, what does wage and hour law say about how we treat volunteers? Are there volunteers? Do you have to pay them? Do you not have to pay them? What about interns? All of that stuff kind of dovetails together. So in the private sphere, right, you're a private for-profit corporation. Can you have volunteers? No. So the DOL expressly states that in the private world, you can never have a volunteer. So employees can never perform any work on an unpaid basis. So if anybody is doing anything to help you, you need to pay for all hours worked. Now, so what about nonprofits? Yes, there is an exception for nonprofits, right? It's under very limited circumstances. We're going to kind of go through that in the next slide. However, you always want to remember to create a written description of the nature of the volunteer relationship. It's a good idea to sort of lay that out, that there's no expectation of pay. Here's what they're going to be doing. And it kind of structures that relationship. And then separately, what about in the public sector? In the public sector, the FLSA excludes volunteers who work without contemplation of compensation and doing work that is different than that which they perform as their job. So you have a lot more leeway in the public sector for volunteers. And let me double check to see if there was a question that came in. No, not yet. Okay. All right, so this is kind of a slide that helps sort of walk you through, you being a nonprofit, what can you really do for volunteer work? So do you have a volunteer? Yes, right. So what does your nonprofit do? Is it religious or humanitarian objectives? If that's true, then the volunteer must usually be part-time, right? You usually don't have full-time employees that are full-time volunteers that are working for free. You cannot displace regularly employed workers or work that regular employees would perform. So that's kind of a tricky one that I see a lot of people get hung up on, right? They really have a need for somebody to come in and help them with something, but they also have employees that they pay to do the same job. And at that point, you cannot have volunteers that are performing that same work. So you have to be careful. The people that come in to volunteer and do work for free must be doing things that your employees do not do. You cannot allow your own employees to volunteer to perform their job duties, right? So even if an employee says, I'm going to come in and work for free and do what I do, you cannot allow them to do that. They're not somehow transformed into a volunteer that does not need to be paid. Obviously, these types of laws are not written from the perspective of having a crisis like a wildfire or a hurricane or something that would create a natural disaster. This is, how do we manage the employers who might have employees come in and work off the clock and then claim that they were actually volunteering, right? The law sort of contemplates that and not the idea that, okay, we have something that is so terrible that people just want to actually help out. It's not being forced. It's not a lie that, you just don't want to pay your employees. So, and then finally, another big point is you cannot volunteer in commercial activities run by the nonprofit organization, which is like a gift shop. And I actually get this question a lot, where you have people that want to come in and work in the gift shop for the nonprofit, and you can't have volunteers that are engaged in that commercial activity. Those must be employees. So, for example, if you have a museum and you have docents that give tours, and that's something that you don't actually employ anybody to do, okay, people can come and volunteer to do that activity. However, if you have the gift shop at the end where, they sell prints of art and that kind of thing, and you have people that say, I would like to work in the gift shop, and that way it helps generate revenue for the museum, and we have that. Can we do that? No, you cannot. That has to be something that is for employees only. So then public service. So if the volunteer wants to do something that's in the sector of public service, again, usually has to be part-time, right? I mean, that's one of those things. People typically do not volunteer full-time work. You cannot allow their own employee to volunteer to do the same work for which they are employed. So again, very similar to the religious or humanitarian objectives, nonprofit. And then finally, anyone employed in the private sector may volunteer in any capacity in the public sector. So if this person has a job in the private sector and that's their primary job, they can come in and they can do any work in the public service sector. And then again, just a reminder, if it's a for-profit company, you can never have a volunteer. Right, so if there's nothing about that, I'm going to sort of transition into the Dislocated Workers Act, which is something that I think a lot of people are pretty familiar with at this point after the pandemic, because this is something that sometimes arose during that period of time, sort of in conjunction with WARN. And I think that we want to talk a little bit more about DWA than WARN for this particular presentation, because DWA is a little bit different in what you need in order to have a triggering event. And I'll get to that in 1 second. But so what does the DWA do? It essentially protects employees from unexpected layoffs as a result of a closing, a partial closing, or relocation, right? So there's 3 different parts to this. It doesn't require an entire closing of your business. It could be a partial closing. And I'll sort of define those, I think, as we go along. So who does the DWA apply to? The DWA applies to any employer who has 50 or more persons in Hawaii at any time during the 12 months preceding its closing, partial closing, or relocation, right? So you have to go back and you have to look at the 12 months preceding whatever triggering event might have occurred to determine, do you have enough employees to meet that threshold? Okay, so say you have 50 plus employees in the last 12 months. What is a closing? It's a permanent shutting down of all operations due to the sale, transfer, merger, or other business takeover or transaction of business interests, bankruptcy, or other close of business transaction that results in or may result in the layoff or termination of employees by the employer, right? So the key language here is it's not any closure. It has to be a closure that's the result of some sort of economic business transaction. So, when do we see these most frequently? When one business buys another one, right? Because when you come in, there's not a continuous stream of employment, even when one employer comes in and they agree to hire all of the previous employer's employees, right? So even though the employee doesn't feel like there's a break in employment, legally there has been, because they are terminated from payroll for one company and then they transition over to the next employer. And we'll talk a little bit about how a natural disaster may affect what this means as well. So what is a partial closing? Partial is a permanent shutting down of a portion of operations due to the sale, transfer, merger, and other business takeover or transaction of business interests, and a result that results in or may result in the termination of a portion of the employees of a covered establishment by the employer. So, what does that really look like? What that could mean is it could be a division of a company. If you have like a data entry division and you have a division that packages products to send out, and you say, okay, we can really handle data some other way, so we're going to close just that section of the business. That would be considered a partial closing. It could also mean that we have locations in various places and we're going to close just that particular location. That could be a partial closing. And then finally, we have relocation, which is the removal of all or substantially all of the industrial, commercial, or business operations in a covered establishment to a location outside the state of Hawaii. So a good example of that is when Bubby's Ice Cream slowly started to shut down and they moved much of their operations to, I think, Arizona. That's the perfect example of a relocation, right? The business didn't actually close. There was no sale of the business. There was nothing else other than they took their operations outside the state. So backing up 1 point to how does a natural disaster affect a closing, or does a closing happen when you have to lay off all of your employees due to a natural disaster? The statute itself doesn't directly address this, and this isn't something that we typically see in case law. So what we do is we look to the Hawaii administrative rules and see, is there any clarification there? And in this case, there actually is. When they go through and they examine different scenarios that they think might be commonplace. And one of the examples is that you have a shrimp farm that's devastated by a hurricane. And then consequently, you have to lay off all of your employees because of that hurricane. Is that a closing? And the answer is no, it is not a closing per the administrative rules. So in this case, if the wildfire has destroyed your business and you have to lay off all of your employees, that probably is not considered a closing for purposes of DWA, at least according to the administrative rules. There is a little bit of nuance here where the Department of Labor and Industrial Relations for a very long time was issuing these letter opinions where employers would write in and they would say, here are my facts. How is this apply? How does the DWA apply to this? So we want to make sure that we comply with that. And then the agency would write a response. To be honest, I'm not sure if they ever made it to being online. We keep a hard copy version of all of those opinion letters that have come out that we can go back through and organize and look to see if there's a specific example that we can try to rely on when navigating what happened with a particular closure or whether it qualifies as a closure. So some of this is that if you feel like you may have a closure, it's a good idea to talk to counsel, whoever that is for you, to say, would this actually qualify as either a full closure or a partial closure? Because there is nuance to that sometimes, and while you may think it is or isn't, if you look at those opinion letters, it can clarify. Okay, so what happens if you do have a closure or partial closure? You need to make sure that you provide appropriate notice under the statute. And so what does that mean? That means you're required to give written notice not less than 60 calendar days prior to the closing, partial closing, or relocation to each affected employee and to the director of the DLIR here in Hawaii. Employers may also combine notices if both DWA and Warren Act apply. Again, this is something that I think came up a lot during COVID, so it's something that a lot of employers may at least be somewhat familiar with because there were considerations while businesses were sort of shutting down during that initial period of time where everybody sort of went home back in, I think, early 2020. And, so why is whether it's a closing or not super important, or whether, natural disaster affects that? Well, it can affect whether you have to give that 60-day notice, right? We certainly didn't have 60 days notice that there was going to be a massive fire that destroyed businesses and caused layoffs. And you would never want to be punished for not sending out that kind of notice. And again, that sort of dovetails with that whole COVID thing too, because we were trying to figure out whether COVID, a viral pandemic, would be something that's considered a natural disaster or not. All right, so what happens if you fail to provide that 60-day notice? Employers who fail to provide appropriate notices could be liable for back pay and benefits, and then a civil penalty for up to $500 a day. So obviously this can get very expensive very quickly, right? Say you have at least 50 employees and there is this layoff, and now you're responsible for back pay and benefits and then a civil penalty on top of it. So you want to be sure that if you do have some sort of closure or partial closure, that you do provide notice. And this may be important for businesses that were not directly affected by the fire, right? The business didn't burn down itself, but now because of the lack of patronage or something like that, now you're faced with, do we have to close or do we have to lay people off in order to survive? And that may also trigger this kind of notification, depending on what's happening. So what does the DWA provide for employees who are laid off? It requires employers to pay a dislocated allowance to all the employees who are eligible for UI benefits. And the dislocated workers allowance is an amount equal to the difference between the average weekly wage and weekly unemployment insurance benefits received. The employers must pay it to affected employees each week that they're eligible for UI benefits, up to a maximum of 4 weeks. Affected employees are not eligible for allowance if they receive supplemental unemployment compensation or other similar benefits, such as severance pay upon termination from employment as a result of a collective bargaining agreement. So, part of what happens a lot of times during layoff is you do create a severance agreement that does have a payout for it. And that's sort of one way that employers who don't have 60 days notice, or for some reason cannot provide that notice, try to go ahead and deal with the notice without just having civil penalties and other things. Okay, so this is sort of where I left with this. There is one more thing that I wanted to talk about briefly, because it's a question that came up somewhat recently, which is, what do we do if we have a location that has been destroyed or badly damaged, and we have employees who want to go back in there for various reasons? Maybe they have possessions that were left in there, or they need to go in, they feel like they can clean things up and get work that they can continue to be productive. Should you be allowing employees to go back in? And I think that that is sort of a tricky question to answer, because you need to consider whether there's going to be potential workers' compensation claims that arise because of that. And it's not just, okay, I go into a structure that's not sound and I fall down and I get hurt, right? That's pretty straightforward. My employer let me in to go get work that's for their benefit. Is that okay? Or is that a workers' comp claim? That's pretty straightforward. But what happens if they go in and they don't have the correct PPE, right? They don't have the correct personal protection equipment, protective equipment, and they inhale things. And it's something that damages their lungs, but it's not seen today, right? It's seen sometime in the future or through multiple exposures. Now we may have a workers' comp case that arises much later. So I think that as employers, you need to be very attuned to the idea that it's not just visible injuries that could happen, but sort of invisible injuries that happen when you allow your employees to go in. So typically what we are doing is that, you as the employer need to receive some sort of request from an employee and then evaluate from there. Is there truly an essential reason that they must go in? If there is, then you need to look at having waivers, and you need to make sure that they're wearing proper PPE, and probably you need to make sure that they're otherwise safe going in. What does that mean? That means that 99.9% of requests for people to go back in are going to be denied. It's just too much risk to have your employees there. Okay, so
Joe, here's another one. Let's say I have a business that was damaged, and I'm trying to clean up and get things going, and my friends volunteer to help me clean things up and repair the building. I think that raises an issue as to whether those people can, quote unquote, volunteer their time to help you get your business going, or whether they'd be treated as employees under wage and hour law. So the hard reality of the application of wage and hour law to the desire of so many people to volunteer and help has to be considered to make sure we don't incur additional liability when we try to recover from this disaster. Likewise, I think one of the concerns that some businesses may have is kind of organizing their employees to help. You see, ABC company is cleaning up this portion of the highway or whatever of the road. If you send your employees out wearing T-shirts of your company to go help with something, that's activity that benefits you as the employer. And if they get hurt, workers' compensation would apply. I think you have a better argument if employees just on their own decide to go and volunteer time to help other businesses or nonprofits and donate their time. So,
right, and sort of likewise, I'd be concerned about the not mandatory training dilemma that sort of is part of too, right? I'd be afraid that there might be a claim that it is not voluntary volunteer work, but the company has sort of mandated that they go and provide that, or they've implied that it's mandatory to go and volunteer to do those activities. And now you do have a event where they're no longer volunteers, right? They're definitely going to be considered doing activity that's for the benefit of the employer. And again, they're going to have to be paid for that. So you have to be very careful.
Yeah, there are some businesses, particularly larger businesses, who will loan employees to other organizations to assist them, but they're paid and treated as an employee of the primary company, even though they're doing work for a second company. So there's no issue with wage and hour law and benefits practices. But that I think is permissible, but the primary employer retains all the liability and expense of having an employee loan to another company or entity, including nonprofits, to assist them at this time of need. I've also had, and strangely enough, just recently been made aware that some employees who are experiencing a lot of stress dealing with managing the extra burdens that are placed on them during this time. So, trying to figure out the rules, making sure everybody's handled properly, making sure all the healthcare benefits are taken care of, or, trying to file insurance claims and all the rest. And some of the employees of companies that are dealing with or providing services to those in need due to the disaster are claiming hazard pay, saying this is, we're working extra hours, we're working extra hard, we should get paid more. That's not the case. I mean, you're paid to do your job, and what you're paid is what you're paid. Now, if employers feel that there's extra work being done that you want to reward in some way, if you're an exempt employee, you can give them a bonus. If you're a non-exempt employee, you can do some bonuses that are completely discretionary, or if you give some kind of a hourly pay, extra pay for somebody, just make sure if it's granted for work done, it gets incorporated in the overtime calculation.
And one thing that dawned on me that I don't think that I covered when we were going through DWA that might be worth mentioning, because it could be a scenario that arises here, is what happens to your business if you lose the lease to the building that you're in. So, right, say that there's an economic slowdown and you can't pay, and you lose the lease to the business. Is that considered a closure, a partial closure? No. The admin rules say that would not be considered a closure. So losing that lease would not be something like that. I'm trying to just think of other sort of examples of something that might happen that's not, directly the destruction of a business, but might trigger DWA or not. And that came to mind.
Well, one of the things that's come to mind for me are that companies that have basically shut down, smaller businesses that have shut down as a result of the wildfires, that subsequently, let's say 3 months from now, decide to sell their property or business. I don't know where DWA applies there. I mean, more than likely you have very few employees left if you had a small business that was devastated by the fires. Or worse than that, let's say you have where DWA might get triggered is, I have a business in Wailuku, and as a result of the downturn in tourism, I'm gonna sell my sandwich shop to somebody, and decided, yeah, I'm going out of business. I've lost half of my business. I can't make it anymore, so I'm just going to sell. Is DWA triggered there? Was it caused by a disaster, downturn in business, or not? And that'll be a question.
Right, because I think under normal circumstances, the DWA triggering event, so say you shut down for a period of time and then you decide to sell later. I think that at the point you decide that you're going to sell, that's the triggering event. And the admin rules have said that a slow sell or a slow transfer out of state is still considered a DWA triggering event. So you have to be really careful when that decision is made in your mind, and is that really 60 days out? If it's not, you can mitigate that by paying out instead of providing notice. But how does that play into the idea that the crux of everything here was a natural disaster? that should mean you don't need to provide notice at all. So how far out can you go before it's no longer that?
And again, the DWA, as you noted, is triggered not only by the transaction, but actual loss of employment. So
Right.
if there are any employees left, then that's what would be one of the triggering factors that would require notice. But if you don't have any employees when you sell, then I don't know I guess it wouldn't apply.
Yeah, you no longer have 50 plus, right? You need to have at least 50 plus in the last. Well, I guess if you look back 12 months and you have 50 plus, even if you sell, then it theoretically
You're covered.
Right.
Yeah.
But
Joe, let me share the screen with two things. I'm gonna.
A second.
Okay, let's see if this works. Can you see this major disaster leave sharing plan?
Yes.
Okay, so I just want to review this. So if you do decide to create a leave sharing plan, these are the 8 factors that the IRS says you need to follow. One is that the plan allows the leave donor to deposit accrued leave in an employer-sponsored leave bank for the use of other employees who have been adversely affected by a major disaster. For purposes of the plan, the employee is considered to be adversely affected if the disaster has caused severe hardship to the employee or a family member of the employee that requires the employee to be absent from work. Okay, so remember, that's one of the factors. The plan does not allow a leave donor to deposit leave for transfer to a specific recipient. And sometimes that's what people were doing at one time or another, saying, okay, I'll donate my leave to my cousin Jill, who needs it. No, it can't be to any specific person. The amount of leave that may be donated by a leave donor in any year generally does not exceed the maximum amount of leave that the employee normally accrues during the year. So kind of limited to what you can accrue in 1 year. The leave recipient may receive the paid leave at their normal rate of compensation from leave deposited into the bank. Each leave recipient must use this leave for purposes related to the disaster. The plan adopts a reasonable limit based on the severity of the disaster on the period of time after the major disaster occurs, during which the leave donor may deposit leave into the leave bank, and a leave recipient must use the leave received from the leave bank. For purposes of the Maui disaster, it's hard to say how long. Certainly, it's going to be a long time for employees and businesses to recover. 6, a leave recipient may not convert leave received under the plan into cash in lieu of using the leave. However, the leave recipient may use leave received under the plan to eliminate a negative leave balance they may have incurred. And they may also substitute leave received under the plan for leave without pay used because of a major disaster. So they can offset time off with the paid leave. The employer must make a reasonable determination based on need as to how much leave each approved leave recipient may receive under the leave sharing plan. And 8, finally, leave deposited into the account of one major disaster may be used only for employees affected by that major disaster, except for an amount so small as to make accounting unreasonable. So there are your IRS 8 factors to set up a leave bank for employees to donate paid leave benefits to other employees that might have been affected by the wildfire disaster. And then one last thing I wanted to share with everybody. Let's see if I can find it now. Gotta stop sharing. Sorry, Joe. I gotta open this up somehow. I don't know how to stop sharing right now. I'm having trouble.
Sorry, at the top of the sharing screen, it should be a button that says stop sharing. I don't know if I don't think I can manually do it.
Yeah, I'm not able to do that right now for some reason. There we go.
There you go.
Okay, let's see here. Stop sharing. Share screen. Oh, now it's got me sharing. Oh, you stopped it. Okay, this is the screen I want to share now. You see the pink sign? Okay, just so everybody knows, Maui's coming back strong. We're working on it, where it's going to be as slow as Pam indicated, but there is a job fair being held in conjunction with Aloha International Employment in Vantaggio on October 25th in Iquihe. If you're interested there, and in October 26th in Ka'anapali at Whalers Village. This is the information. You can go to info.hawaii@vantaggiohr.com and sign up or get involved. Just wanted to share all that with everybody. So with that said, I will try to stop sharing. And any questions?
We both did a thorough job. It doesn't look like there are any questions right now. But if after this there are questions, please feel free to email Trisha and we can circle back with Joe and John to find the answers.
I think things,
go ahead.
Yeah, I was just going to say, Sherry, things are evolving. You know, everybody is dealing with the emergency necessities. You know, what needs to be done right now? What can we do to make sure our employees are healthy and cared for? And as time rolls on, some of these difficult questions are going to be faced by employers and employees. Do I want to go back to work? Do I have other issues that are going to prevent me from going back to work, whether it's family or my own health? How is this going to affect people long term? The stress related to the kind of work people are doing in recovery and rehabilitation of these businesses. All these things are going to pile up and create issues for businesses. And that's why we said, you know, to you and Pam, you know, we can be a resource. We'd be happy to do this little seminar and kind of cover some of the major topics, but I think it's evolving, and we're going to see more issues we haven't even thought of yet arise in the future. So we're here to help, and glad we can be a resource.
Do you have any suggestions as relates to mental health? Right. I mean, I think this is going to be huge, and gathering these resources to offer the support. Any additional comments about that?
Gosh, I think anything a business can do to help their employees deal with this terrible tragedy is good. I mean, most healthcare plans have some kind of employee assistance program. I don't know whether, you know, depending on the nature of the business and its size, whether they can provide any kind of other kind of counseling to people on managing the stress. Joe, you got any suggestions there?
No, I mean, I think that's really all that, you know, you can do is try to look at your plans and see if there is that employee assistance program that's sort of built in, and make sure that people understand that it's there and that they should feel, you know, free to use it if they need it. And then separately, I mean, sort of be prepared for, you know, getting sort of requests that could be ADA/disability discrimination because of the fallout from this, and, you know, stuff like PTSD or anxiety or clinical depression. You know, you may see an uptick in requests that people need accommodations for that. So, you know, be cognizant of that and try to be sensitive to the idea that you're going to need to work through the process and probably get pretty good at it. So keep that in mind.
Likewise, as you mentioned that, it came to mind, Hawaii family leave and federal family leave. If you're a large enough employer that has an employee whose family member or relative was affected by the disaster and needs time off to care for them, that might be a covered issue that's going to see some uptick in usage of FMLA and HFL.
Okay, thank you for that. I don't see any other questions, so I know we have 6 minutes left, but we'll give back those 6 minutes to everyone. Just wanted to thank again John and Joe for sharing your insights, your perspectives, and the legality of employment law, this important topic with the business community. And we greatly appreciate your time and expertise this morning, and for always being there for the chambers, Maui Chamber, as well as all the neighbor island chambers in our chamber. Wait, I did see a question pop up.
Will the slides be sent to us? Yes.
Yes.
Yeah.
Yeah. Okay. But anyway, yep, the slides will be sent as well as recording. But again, thank you so much to Joe and John, partnership with the Maui Chamber, and Pam and her team for all that you're doing, as well as all of you who are on this Zoom call. Please, we are here as a resource, as well as the Maui Chamber. Whatever we can do to assist, any questions may answer, please reach out to our team. Because really, as we all been saying through the pandemic, and now here we are, we all have to do this together and work together in moving our state forward. So mahalo to everyone on the Zoom call.
Thank you.
Thanks, everyone.
Thanks.